Hi everyone, hope you're well. Brett Sebion, financial coach at Emerge 360, here to give the Q1 market and economic update. As a reminder, the TrustPoint investment team actively manages your Emerge 360 portfolios. But today I'm going to talk about markets, how they've performed so far in 2026, changes we've made to your portfolios, and where we might be going from here. So 2026 has been a little bit of a volatile year due to the geopolitical risks that have taken place. As I record this in the middle of April, markets have actually righted themselves higher, and a lot of areas of the market have eclipsed to new all-time highs. And it's just another example of what it means and the importance of being a long-term investor, knowing that day over day or month over month, markets can be volatile for a number of reasons, but it's important to keep that long-term picture intact. And this most recent market volatility is just another example of the importance of being that long-term investor. So this is a 5-year chart of the global stock market. That blip on the right-hand side shows the volatility that we all experience, specifically in the month of March. But again, this offers good long-term perspective of what it means to be that long-term investor. There's blips along the way. There's blips almost every single year, but you can see the long-term trend is ultimately higher, and that's always important to keep in mind. But markets were volatile in the month of March, and we saw global stocks trade lower, a little over 7%. And most areas of the market experienced that selling pressure. Again, as I'm recording in the middle of April, a lot of these numbers have flipped to positive, but we did experience a lot of volatility due to the uncertainty around the Iranian conflict and the geopolitical risks that came with it. So that's on the equity side. On the fixed income side, there was also some selling pressure. As a reminder, interest rates and bond prices are inversely related. So as rates rise, bond prices fall and vice versa. So as we saw the price of oil increase, inflation expectations increase, that put upward pressure on interest rates, which ultimately put downward pressure on fixed income prices. How we're positioned today, we slightly favor equities relative to fixed income in client portfolios. So if you're in a balanced objective, we target 50% stocks, 50% bonds. We're slightly overweight equities relative to fixed income. And some recent changes that we've made are here. So we've covered all of them in recent videos up to February of 2026. So in that month, we increased our overweight to international and cyclical equities as our conviction level for those asset class strengthens. And a lot of those same trades, or the initial trades, were done in September of 2025 as well. So again, our core theme has been that economies are performing well. Company earnings expectations remain intact and are healthy. There had been healthy rotation taking place underneath the market, money rotating into cyclical areas of the economy, rotating into international equities. And those are some of the themes that we've tried to capture, and we have captured in the last few months. So thank you everyone for listening. Thank you for being clients. Please don't ever hesitate to reach out if you have any questions on portfolios, if you have any questions on markets, especially when they're volatile, or if you have any interest in updating financial plans, which can be a great thing, especially if you're nervous when markets are volatile and you see your account balances be volatile. How does that impact your long-term financial plan, right? So sometimes that's a great time to update the plan as a peace of mind, but we're always here to help coach you through anything that comes from the market volatility. So thanks again. Thank you for being clients, and we'll see you next quarter.